Hi, I'm Shauna Riley from Team Zuber & Associates at Stonehouse Realty. I'm here with Manny from Mortgages Labs, and we're going to be going over presale financing. Since we have quite a bit of presale projects going on here in the Presale Valley, we have exclusive access to them, and we have buyers that are looking at getting financing. And we have quite a bit of questions that come up regarding getting qualified for it. So I'll just go over some of the common questions that I get. As far as if you were to write an offer today for a pre-sale, and it's not going to close, let's say, for a couple of years, like as far as getting an interest rate locked, or is that something that can be done, or is that something that needs to be done maybe 6 months prior to completion date, or how would that work?
Yeah, so there is the option to lock a rate for a pre-sale. To tell you the truth, unfortunately, it's not on the broker channel. You're going to have to go to your bank and the branch to do that, and they will lock you into a rate. But it's rarely done, and it's rarely useful, and that for a number of reasons. So the first problem is that if the bank guarantees you a rate from now until 2 years from now, they have to account for all the fluctuations in the market. So typically, if I can get my clients into rate X, you go and you lock a rate for 2 years, you're going to get rate X plus 1.5%. So we're talking about differences as between 2% or 1.5% interest. You can lock a rate today at 3.5% to 4.5%. So it's rarely beneficial. The other problem with that is that the bank is looking at your finances today. They're looking at credit reports today. They're looking at your income today. If any of those factors have changed through the course of time, your credit has a blemish on it all of a sudden, or your credit debt has increased in that time, believe it, they will withdraw their offer to finance you. Even you were pre-approved, but then they'll pull a credit report just a month before financing, and if they don't like something, if there's a blemish on the credit report, they will take that pre-approval back, and that's always the risk. The practicality of it is, as long as you have the down payment, what we like to do with our clients is we like to go over all the documentation, see all the income structure, the down payment structure, the credit, and then you work with somebody that is working for you and with you. And that allows us to guide you and steer you away from things that could be problematic later on. Like I will tell my client, don't buy that fancy new truck now.
Yes.
Let's wait to close on the deal, for instance, right? So you're not messing up with your credit picture. That's one thing. If we start working with a client 2 years prior, it gives us enough time to correct blemishes on credit.
Yes.
We know what it is that we're dealing with. We know how to fix it. We can coach the client and make sure that he comes ready for the deal. And no bank is going to do that work with the client. And what we usually do, we try to get the client to start working on the mortgage application 5-6 months before the due date to close. We get the mortgage approved up to 4 months ahead.
Oh, okay.
And that rate hold is way better rates, way better conditions. We have way more lenders to work with, and we set the client up for success.
Now, as far as the number of lenders, is there quite a lot of lenders that will finance a pre-sale, or how are you finding that?
Most lenders will finance a pre-sale.
Yes.
There's room to talk here about the difference between a pre-sale that you purchase to live in and a pre-sale that you're purchasing as an investor. And there has to be a very, very clear differentiation between those two groups of potential clients. For somebody who bought a pre-sale to live in, every lender is gonna lend to them. It's really not a problem to finance. When we come to investors, it really depends if they bought it to keep it as a rental, or they bought it to sell it and reassign the contract in order to get the lift, because that lift is where the problem lies. And the main problem is that in the typical development, we have many times a lot of investors, and they all want to sell at once.
Yes,
right?
yeah.
So now all of a sudden, 6, 7, 8 units are coming on the market. The the coached investor that actually wants to maximize their profit, they should actually wait. So they should close on the property, and sometimes those people, they already have many obligations because they're investors and they have multiple units on the go, and those are the harder one to qualify because of debt ratios and income structures. But we do have solutions for them. We've done many of them quite successfully by going to alternative lending, get them qualified, get them financed on the alternative side for a short period of time, 3, 4 months. Once all the other units have been sold, and with every unit that sells, the price is actually going up, then our client is going and they're selling that and paying the loan back. So that's one option. The other option is to actually close on that, but we can basically eliminate the need for a down payment because the new value of the property will always be higher than the value of the property when it was bought. That delta, when you go to a lender at closing, they will not acknowledge that lift,
Oh.
right? So you can finance them with alternative lending, and once you own it, we can refinance them according to the new number or the new value, and basically give them their down payment back and get it financed that way. So there's all kinds of solutions for that, and we do them quite a bit and quite successfully.
Yeah, and that's great for an investor to know that, because then they might be purchasing a pre-sale now and they're thinking about purchasing another pre-sale, so they might be able to use that equity now for another property that they're looking to purchase.
Absolutely.
Yeah, no, that's great. Yeah, I actually did have a question regarding requiring a 20% down payment if you are an investor. So is that the case? Do you still need that when you're out there, working with an investor as a realtor? I'm out there working with investors, and they're looking at getting their financing. Do they need to have that 20% down payment at the time that they're writing the offer? Do they need to consider that?
So they don't need the 20% when they're writing the offer. That really
Yeah.
changes from one development to another. Some developments would accept 5% down as
Yeah.
the deposit. Some would require 15%, and there's usually a schedule like 5% at signing, and then maybe 5% a month after building
Yes.
permits and whatnot, right? So it
Yeah.
really depends from one development to another, and that's where you shine, helping represent your clients' interests in a way that allows them or set them up for success. Now, when it comes to rental properties, by definition, when it comes to lender, we need at least 20%. There's
Yeah.
actually some talk about federally regulating that to 30%.
Oh,
That's
interesting.
in prediction that I heard for the next couple of years. But even then, it's going to be federally regulated. We still have other lenders in the space that are going to do other things to help us set up our clients for success.
Yeah, that makes sense. Yeah, the other thought that comes to mind is that might be some buyers out there that might even take a home equity line of credit, perhaps, and use that as a down payment. Have you had clients that have done that?
I have done that myself.
You have done it yourself. Oh, that's great.
So
Yeah.
this is part of the strategy is when you have equity in your home, we can set mortgages up that are either readvanceable mortgages or mortgages that have higher equity squeeze out of the property using 30 years AM and all kinds of other tools that we have in our disposal. And then with that money, we take that money and they put it as a down payment for a pre-build. And then 2 years from now, when that pre-build actually completes, there's all kinds of scenarios that we can work with. This is not a tax advice because I'm a mortgage broker and I'm not,
Yes.
an accountant, but somebody who wants to do that should consult an accountant because there
Yes.
are also tax benefits for that. Typically, the money that you take out of a home equity line of credit for the purpose of investment is actually a tax deductible. So not the money itself, but the cost of borrowing. So the interest you're paying on that line of credit is a tax deductible for many people. And again, that should be discuss with an accountant.
Yes.
But there is money to be made there for sure.
Yeah, well, that makes sense for sure. So let's see here. So what's the longest period of time you can secure an interest rate for pre-sale?
There's probably three most common tiers for that. The longest one is around 4 months, so 120 days. So it's 4 months. So once we get everything done, we get the mortgage approved, we get the rate approved, that rate is going to be locked for 4 months. The small benefit to that is that while this rate is locked, we are not keeping quiet, right? If you lock that rate with the lender, that is the rate you're going to get from the lender. When we lock that rate with the lender, two things can happen. Another competing lender can come with a lower rate, and we already have your file, so we will work with that lender to improve on the offer we already got you. The other thing that happens is that sometimes lenders drop their rate in that 4 months period.
Yes.
When you do your mortgage with the lender, they're not going to tell you that the rate dropped. But we know that it did. So we demand it for our clients, and we usually get it. Not usually, always we get
Yeah.
it. So that's another advantage of working with a mortgage broker that has access to all these things and gets the regular updates on what's out there and what's hot in the market, because then we have our client's best interest at mind, and
Yeah.
we basically watch your back, right? So that's one tier. So most lenders will give us 120 days, some will give us 90 days, and then there's the quick close ones. Sometimes we have lenders coming into the space with like bottom floor rates, but you have to close on them really, really fast. The advantage of working with a broker, again, we already have your file, we already done all the due diligence, we already seen all your documents. That allows us to respond really, really quickly to those promos that come. And I actually had a client like that. We had her pre-approved. She was waiting for the deal to close. She had 3 months to close. The client was actually out of the country, traveling back to see her parents in Europe when a promo came up. When she came back, she already got the lower rate, and she was so surprised because who would have expected that? Right?
Yes, of
But
course.
we saw the promo, we just jumped at it, and we got it done for her.
Oh, that's great. Yeah. And now you guys also deal with the big banks like TD Bank, Royal Bank. You go. So if you have a client that's more comfortable, maybe dealing with TD Bank, maybe they've had past experience with them, you could also approach TD Bank and say, "This is what we've got," and and try to get them to negotiate the best rate for them.
So we're part of the DLC group of companies. It's the DLC group of companies. It's a huge network. We have Mortgage Architects, Dominion Lending, and Mortgage Center Canada. So really, the DLC group of companies funded over $75 billion in funded mortgages only last year, which is probably two big banks together. That gives us a lot of access, and a lot of lenders are knocking at our doors to become one of our suppliers, right? So HSBC, for instance, is now working only with the DLC group, and after many, many years being outside of the broker channel, they came into the broker channel because they value what we do for the clients, and they value the way we conduct business. So we do work with TD, Scotiabank, HSBC, and those are the big names. We also have Monolines, which is same thing. It's just another bank. They're regulated just the same, operate just the same. They're called monolines because they have only one product. They're not going to sell you a credit card. They're only going to sell you mortgages. And but they don't have brick and mortar spaces. The way they work is through the broker channel. Now, as part of the DLC group, we have access to like 70 lenders. I'm not working with 70 lenders. I don't think it's helping my clients. We have 4 big banks. We have 4 or 5 monolines, and we have some private lenders as well that we work. So we communicate on a regular basis, anywhere between 15 to 20 banks, which gives us access to over 100 types of products, and that's way enough to meet most of the needs of our clients.
Yeah, and that's what I always tell my clients. If they tell me, oh, I bank with TD Bank and I just want to deal with them directly, I let them know, consult a mortgage broker. They're going to have access to much more products than your bank because they're only going to try to sell you their product and their product alone.
Absolutely.
They're not going to try to...
And even TD is one of my favorite lenders. I can say that. I am not ashamed to say that. And so is Scotia. They do great things for our clients. But when you walk to the branch and you lock a rate, that's your rate. If the rate dropped tomorrow, even TD, with all the love that I have for them, they are not going to tell the client that the rate dropped. But we will.
Yeah. And which could save them hundreds or maybe even thousands of dollars.
I'm working on a file right now that already got approved, and we're looking into approve it again with a different lender. And the interest rate, the accumulated, we just calculated that yesterday, the accumulated interest rate for that client, that deal, the difference between the two products is going to be $75,000.
Oh, wow.
Of not the mortgage, the term, like within the next 5 years. If we manage to do it for them, we'll save them $75,000.
Wow, that's incredible.
Like, those are real numbers.
Yeah.
I kid you not.
Wow, that's incredible. So I guess the one thing with pre-sales that I know some buyers are concerned is, what if the market changes? What if prices go down? Maybe even slightly. I mean, we haven't really seen a big drop in prices, but we've seen a bit, back in 2008. We did see a little bit of a price drop. The market was a little softer at that time. So what are some, how do you guys mitigate that if prices do go down for the pre-sale?
Yeah, that's always a concern. And it goes to what are the market fundamentals. I don't see that as a problem. I don't think it's actually going to happen ever. Especially not here in BC, maybe in other markets in Canada, but when you're in the GTA or you're in BC, you're pretty immune to that. And it really depends on what your plan is. So if you are buying this for yourself, even if the market drops a little bit, it doesn't matter because it's going to go up eventually, and as long as you live in it, it doesn't really matter. And if you're an investor, then the investors know that those deals are somewhat speculatory in nature, because you have to speculate what's going to be the value, and you always have to have a plan B. And I tell that to all the investors that are dealing with pre-builds. And I set my clients with plan B always. If the market does that, we can do this. If the market goes up, it'll be worth to look at 1, 2, 3 options. If the market goes down, we still have a solution. So I always say, go into those deals with the end in mind. Have a plan A and a plan B.
Yes.
And really talk it through with a mortgage broker. It is rarely, I don't think you can go wrong. With
I agree.
Pre-sales. I see people only doing well with them. And as an investor, if you bought it and the market went down, then you just rent it. Instead of doing the lift and getting out of the deal on completion, you have to be ready to put a tenant in there, wait for a couple of years, let the market recover, and then get your money. But I've been dealing with real estate for the last 8 years as an investor. I can tell you that I myself now am invested into pre-builds. So I believe in that product. I believe it's a good, there's good opportunities there.
Yeah, absolutely, Well, I appreciate you going over my questions, and if anybody needs assistance with their mortgages, pre-sales, I've got Manny here from Mortgages Labs. He can help, and if you need help with purchasing a property, give me a call, and I'd be happy to help you.